Well, from Otet Markets, this Sahura will be with you to review the U.S. personal income spending data and market reaction. Let's start with yesterday's data, and then we can go forward and check the today's data as well. Yesterday, we had the same data, the personal income and spending data for fourth quarter. Also, we had the GDP numbers. GDP in the fourth quarter increased by 2.3%, but GDP price index in the fourth quarter increased by 2.4%. Also, we had the durable goods orders. We can see that the durable goods orders increased by 3.1%. So the people had more in spending for the fourth. That was for January. The other data sees the PCE price index, PCE price increased by 2.4% in the fourth quarter. So generally, the numbers in inflation, the 4% inflation in the fourth quarter, it was even higher than expectations, and also while the GDP increased more than third quarter, also the GDP price index also increased more than expectations. So keep that in mind, and let's now go and check the today's data. Today we had a PC price index and personal income spending for January. In January, core PC price index on the monthly scale increased by 0.3%, in line with expectations. On the annual scale, core PC price index increased by 2.6%. That was also in line with expectations, but lower than 2.9% in the previous month from December. PCE price index, the headline inflation, increased by 2.5%, in line with expectations, and lower than 2.6% in December. On the monthly scale, PCE price index increased by 0.3%, in line with expectations. I'm repeating the same number in December. Till now, if you look at these numbers till now, you can say that, okay, inflation was in line with expectation and full. So we can say it's a good news for the inflation. It can be the good news for the Federal Reserve as well. Well, blah, blah, blah. But in fact, it's not that. If you go forward and check the two other numbers that we had, so let's say that personal income increased by 0.9%. Yes, you can hear that. You hear that correctly, 0.9% after increasing by 0.4%, which was again a nice number, a good number. But in January, personal income increased by 0.9%. That's an amazing number that can show that the labor market is really strong and the people they're making money. On the monthly scale, but spendings fell by 0.2%, while the real personal consumption also fell by 0.5%. So personal spending fell by 0.2% and personal consumption fell by 0.5%, while both of them increased by 0.8 and 0.5% repeatedly, respectively, in previous months. That says that the people, they made more money. If you think about why the spending fell in January, we can say that if you go check the historical trend, in January people, they usually spend less money because for the New Year Eve and for all these holidays, usually we spend the money in December. We book everything from December, so that's why we pay all of them earlier. That's why the personal spending in November and December usually increase, and in January it fell, the same as retail sales. So that's why we can say that the people are not spending less money. That's the nature of January. But it's not the nature of January to increase the income by 0.9%. More than two times compared with the other months. That means that the people, they are making money. That means the people, they making money, they have money, so savings also increase, which means that in the next months, the people demand can increase, and when the demand increase, the prices also increase. So that's not a good news for inflation. While at the first glance, the PCE price index and core PCE price index by 0.3% monthly increase, in line with expectations, shows everything normal. So that means these numbers, they shows that in the first quarter, same in January also, the inflation is not still controlled, and the Federal Reserve will have harder job or will face more challenges to control these numbers. As a market reaction, if you go and check the market reaction, US dollar index at the first reaction had somehow negative reaction to these numbers and slightly fell, but the federal US dollar index already increased from 106.60 to 105.40. So if we have some correction, it's normal. But generally, these data will pause this correction, can put the correction one step back because these numbers means that the inflation is hotter than expectation. That means that the US dollar can hold its gains that it had previously. Going forward and checking the other markets with the stronger US dollar that we had in the previous months, yes, gold is under pressure. But will that be under pressure still or not? We can say that with these personal income and spendings, we can see these numbers are not in favor of stock market. So these numbers can put the pressure on the stock markets, which means negative news for the stock markets, and the pressure on the stock markets can continue for time being. That is the positive news for gold. Why? Because the money goes out from the stock market. If you check the technical chart of the gold, also you can see, even with the prices falling down sharply, the OBV line is not going so fast down, and also the RSI is moving around between 20 and 30, which means downside pressure is not strong, so we can expect some reactions and some we can say that the correction can end these in these levels, and we can expect the recovery from these levels around 2,850 or numbers around that. The correction is likely. So that news can be positive for gold. That can be the positive for US dollar index. Positive, not in that mean that it can increase the dollar index higher because it's already increased, but it can hold its gains around these current level. It's not a good news for WTI for oil, but the lower prices for oil also is not expected at this time due to geopolitical tensions around Ukraine and Middle East. Also, the S&P 500 and the Nasdaq and Dow Jones, all of them, they have almost the same reaction. These news, they are not. It's not a positive news. Maybe in the first reaction, in the first glance, yeah, the number shows that the PC and core PC price are in line with expectations, but not checking if you don't check the more detail. But if you check the more detail, you can see that these numbers are negative for them. And about the cryptocurrency market, these numbers are not I mean, they are not the number that you can say that, yeah, that can support the cryptocurrency market, but it's not the negative number, negative news is for cryptocurrencies, especially for the Bitcoin. So the news can be natural for the cryptocurrency market, negative for stock markets, including US Dow Jones, Nasdaq, and S&P 500, natural for oil, positive for gold, positive for dollar index. Even tentative dollar index can have some correction reaction, but as mentioned, the dollar index already increased, and these numbers can just help the US dollar to hold its gains. That was the news, detailed number in market reaction. If you had any other question, hope it was useful for you first of all. But if you had any other question, don't forget to write in the comment sections. I will try to get back to you as soon as possible. Have a good time. Bye-bye.